is that it's a missed opportunity or an underutilized opportunity for car dealers. Let me tell you why, Craig.
Dealers need to look at where they can find better margin or more margin, and finance has to be one of them. And to your point, not just selling finance.
Welcome back, Craig.
Glenn, how you been?
I've been good.
You're wearing the same T-shirt that I saw you.
I've only got two different T-shirts, this and the corporate polo.
You're like the Steve Jobs of the automotive world.
Wear the same two polos to brunch on the weekends too. They're good 7 days a week.
Excellent. I'm still sponsored by Gant. It's going well.
That's good. So, what's the topic today?
It's
not men's clothing.
It's not men's clothing, and it's not luxury, because we did that weeks ago.
Okay.
Weeks ago. Today we are talking about finance. Finance, yes.
One of my favourite topics.
I mean, is it?
I do love finance.
You do love finance. You love it in terms of actually getting finance.
I think it's just good news for dealers. I mean,
It's good news.
I love taking a loan. I love giving a loan.
Yeah.
But I do think it's a good news story for dealers. You know, when I was a young whippersnapper, we had a dealer principal who used to keep talking to me about the pool of gross. It was the gross on the metal, the gross on the finance, the gross on the insurance, the gross on the aftermarket. Just so many opportunities to make money selling a car.
Yes, the old profit pools.
That's it. Profit pools, pools of gross.
Yes, I've heard that before. Yeah. I'm sure you are far closer to this than I am, but it does feel like finance here is still not where it needs to be from a consumer perspective. And if someone can get it right, it will unlock a huge opportunities, my feel, for this marketplace.
I have such mixed feelings because I can remember 10 years ago sitting in boardrooms, sitting my head against the wall about balloon payments and PCPs and guaranteed buybacks. And all the customer wants to know is, can they get 1.99% finance?
Yeah, or can they afford the monthly repayments?
Yeah,
I think it's more of that, isn't it? It's like, that's $5,000 a month. I can afford that. I'm good to go.
Yeah, it's a bit of both.
I think both.
And then you know what? I think the 20% down payment slows people down a little bit.
Yeah.
Yes and no. I think it depends how long you've been here, because I think most people can bang the 20% on a credit card, or they can find a way to get 100% finance. But it's certainly, I think, if you're new in Dubai, it might slow you down a little bit.
Well, I guess, it's one of those problems, isn't it? When you first come to Dubai, your upfront costs are high, aren't they? Because you've got your villa or apartment, which could be 4 checks. It might be 1 check. You've got your school fees. You've got the cost of moving here, furniture, everything else. Yeah. And then you've got your, estate agent fees, which everyone loves to pay those. And then you've got to find 20% for your car. So it's a big thing. But what is it I could talk for hours about my frustration with finance and why it's not better. That's probably not going to help people listening into the podcast. I think, have a more structured view on how you want to run this podcast. So why don't you run it, and I will just rant about why things should be better from a finance perspective.
Sounds great. Sounds great. This feels like an episode of Clarkson's Farm here. Look, my thinking around this is that it's a missed opportunity or an underutilized opportunity for car dealers. Let me tell you why, Craig. Do you know what percentage of dealership profit in the UK comes from the finance department?
As a percentage?
As a percentage of the overall profit of running a car dealership, how much is coming from F&I versus service versus selling a car?
I would say of their overall profit, it'd be over 50%, I would have thought.
Well, it's not quite that much. Service departments are pretty profitable.
Oh, you're talking about...
overall profit for a dealership.
You're talking about approved dealers that have service centres as well.
Yeah, if you're running a new car dealer...
I was just thinking about used dealers that don't have service centres. So, okay, you're talking about the whole kit and caboodle, new, used, service. Okay.
If we've got, Craig Stevens Saabs, and you're selling new and used Saabs, and I know they don't exist anymore, but how much
in
of
that
your...
case, then I would say 15, 16%.
It's 33%.
Wow.
A third of all dealership profit comes from F&I. And I don't know where the other 67% is coming from, but I would guess 40 or 50 of that's probably coming from service and parts. And, selling new and used cars is probably 7, 8, 6,
7, 8.
6, 7, 8%.
Well,
I think we're still a bit short of the 100, but
yeah.
well, manufacturer bonuses is probably that last 10%. That probably gets us to the 100.
Yeah. So, well, warranty work, I suppose, as well. That probably makes it.
Service and parts, I think. Or maybe service and parts is 50 plus %.
Yeah. Very interesting. Yeah. That's a lot of money.
Do you want to take a guess of what it is if you're running a car dealership in the UAE?
Can I ask, is this for a dealer that has new, used, and servicing?
Yeah, so it's the same dealership.
The same line for line.
Your same dealership here in Dubai.
3%.
I think it's lower than that, Craig. I think it's closer to the 2.
Is it really?
Somewhere in 2 to 3%.
Wow. Is that because they're just making so much more margin on the other stuff, or is it because they're not optimizing finance?
I think it's a bit of both.
Bit of both.
Probably a fair bit of not optimizing finance and the other pools.
Because we know the dealers here are good at high margin selling, right?
Yes.
They are better here than most of the places for high margin selling.
Yeah. Okay. But I think where it really, where the UK dealers and the Australian dealers as well have it down pat is the bundling that goes on in the finance repayment. Do you want to explain for the audience what I mean by that, or you want me to...
Well, look, I'll give you my view on this, because I think, if I come at it from a consumer, I think when you break everything down to a monthly payment, everything seems very realistic on a car, right? So when they start bundling in the additional products and services and paint work and paint protection and gap insurance and
tyre and rim,
oh yes, and it's this only costs you £2 a month, and this only costs you £5 a month, and you kind of sign up to it.
What's the difference between £200 and £210?
Exactly.
And now you've got tyre and rim protection.
Yeah.
You'll definitely need.
Yeah. No, and they're very good at that. And also it's a no-brainer product, right? That just gets bundled into the finance deal.
So it's not just about making money on the finance, it's about making money on all those other things which you can bundle into a monthly repayment that is a lot more difficult to bundle into a cash deal.
So, all right. I think everyone would agree that finance is fantastic for both consumers and for dealers. Why is it not so well managed over here? What's the challenges?
Well, I think there's a few different challenges. I would say the first one is there's not the same product suite of finance products available. In the UK, you've got leases, you've got normal consumer loans, you've got PCPs, balloon payments, you've got a smorgasbord of different finance options.
Yeah.
And 85 to 90% of consumers are going to finance their car. Here it's more like 50 to 60%. And here you don't have that array of options. You've really just got, or the dominant finance option in the market is just a straight consumer loan, 5 years, pay it off in full. That is, I would say 60, 70, 80% of all finance cars are on a 5-year loan, paid off in full. No balloon payment, no 7-year option, no guaranteed buyback, none of all these frills.
Yeah.
So consumers have less choice.
Yeah.
I'd say this is the first thing holding it back a little bit.
Consumers have less choice. And that is driven predominantly by either the banks or the financial institutions that just are not releasing those products into this market.
Well, I think it sort of leverages into the second problem. I think not enough dealers take ownership of the finance process, especially in the second-hand market. I think dealers are more than happy to have the bank rep come to the showroom and take care of that for them.
But you have to have that, don't you? My understanding is that you still have to have this body check for every finance deal. So one of the guys from the bank has to personally see you and check your documents to get the loan. That's my understanding.
No.
Is that not true?
We have a fully digitized finance offering that we offer dealers where they can do a full electronic consumer loan application. Depending on the bank's credit appetite, they might do a physical workplace inspection, or they might require wet signatures to make sure the person exists. But it's definitely not a requirement that a person...
Right.
So things have changed, I think, a lot in the last few years. But I think what I'm getting at is you look at some of the dealers, and there's one or two names which come to mind, which I think do a great job of F&I in this market, and they take control of that process. The F&I person is employed by the car showroom.
Yep.
They take control of helping the consumer choose the best finance option for the consumer and for the dealership, I'm sure, and they start bundling in those services. And you know what? The consumer wins a little bit too, because if the dealership's just built all this trust with the consumer buying a car, and then some other guy walks into the showroom that they've never met before to do the loan application. It's a bit of a disjointed sales process, but if they walk to the next office in the car showroom that they've already had a great experience with, built the trust, decided that they want to buy that car from, and they get someone who's knowledgeable and gives them choice of the different products in the market, and the sales executive can be involved in that process, I think that's a great experience for the consumer, and I'm sure the dealer makes 2, 3, 4 times the amount of money on that transaction.
I've also had the other challenge is the speed it takes the bank to then reimburse the dealer with the finance. I mean, that can take 7, 14, 21 days to clear. So
exactly.
from a cash point of view, it's not great for a dealer.
But I know a lot of banks are getting better at that. I know one of the biggest banks in Dubai is guaranteeing 24 hours. Wire within 24 hours.
You can name them on the podcast. Who is doing that?
I won't name them. But I think it's actually, I was in a meeting with one of them, and that was a discussion point. And I know some of the others, they're aware of this pain point. And in the last year or two, they've moved away from checks. They're doing direct transfers. If it's a same bank client, it's same day. If it's different bank, it's next day, which is what it should be.
100%. Well, look, if any banks are listening in to this podcast, which I'm sure you are, then please tell us if you can reimburse the dealer within 24 hours, and we will talk to our dealer network and we will tell about this, because that'll be great news for them. So please come back to us. I remember when I first moved over here, and this practice still happens for the bank that I was using. I am a customer of the bank. I bought a car. I had to go to the bank. I had to write a check to the bank that they put in the safe, right? Which I understand.
Have you ever asked for that check back?
No, I never asked.
I tried once.
I mean, I kind of get the fact that at the time, this writing of checks was a legal document, and therefore it was a contract, and that's why it was important. But I was just puzzled by the fact that if I've run out of cash, this check's not going to help you, right? I've run out of cash. It's from my account. I don't understand it. So there's a very interesting process around that. I think
they've changed a lot.
They've changed that. That's sped up. I think the other thing, I suppose, going back to your earlier point, was just dealer engagement. Dealer education on how to manage customers who want finance, because some of them are just handing it straight over to the bank and saying, "You deal with it."
Yeah, exactly. Which is a lost opportunity.
Now, you asked me a question before we started about our involvement in finance and what we offered. So we used to have on our site the ability to search by finance.
Okay.
So customers could actually search by monthly payments.
That sounds good.
It was really good, and we had great traction on it. But what we found through this process was that, firstly, good news was consumers are far less price sensitive when they search by monthly payments. They know what the budget is.
Yeah.
It's $5,000 a month.
Yep.
And once they see 5,000, they don't try and negotiate on the price.
Okay.
They don't say, "Oh, can you do it for 4,500?" It's like, "I can afford 5,000. That feels like a good deal." So the leads we were generating were super hot leads. Consumers not worried about negotiating on price. Okay. It was more about facilitate the deal, right? Yep. I'm happy with that car. I'm happy with that payment. Yep. What's the next steps? Well, then the dealers would pass it on to the bank. Then 7 days later, the bank would come back to the customer. It was just a mess. Yeah. And that's why we actually pulled it from the site.
Okay.
Because we were just upsetting customers. They were really upset by the fact that it was just a horrible, horrible process.
Okay.
I think it's probably time we revisit that and have a look at it again, because the market has. This was 3-4 years ago. The market has moved on.
Yeah, for sure.
Where do you see, from a dealer education point of view, where do you see dealers needing to focus then to really bring this to life for them? What have they got to do differently?
I think there's a few things. Firstly, they've got to be able to understand the product offerings in the market. That's the first thing. Understand what are the current market rates.
Right? In terms of the product offerings.
Yeah, but also, the first question out of every consumer's mouth is, what's the interest rate?
Okay.
So just understand.
So the rates and the costs.
What are the rates? Yeah. Which banks do they want to work with? Because they can get paid quickly. What are the panel of banks that dealership wants to do business with?
Yeah.
Think they've got to take control of that process. So they've got to, instead of outsourcing that process to the bank, sort of bring it in-house, think about having a dedicated F&I person, because from what I've seen, the dealers that do that get far superior results. They get the customer approved faster, the customer's got a better experience, and I'm sure they're making more money. And then they've got to think about managing that process from start to finish. And the great thing is for most dealers, they get a commission on these deals.
Yeah.
It is a profit center. And, you know, if they're only making a dealer 10, 12, 15% on the metal, another 1% from the finance, 1% from the insurance, another 1 or 2% from the warranties, the gap, the tire and rim, can really change, you know, that can be the difference between making and losing money in a month for some of these dealers.
Yeah. No, it's a really good point. It's a really good, and I think, you know, if you look at the way the market is moving, especially with the introduction of the cheaper Chinese cars, I think there'll be margin compression going forwards forever now, because there's just cheaper product coming into the market.
Yeah.
So, you know, dealers need to look at where they can find better margin or more margin, and finance has to be one of them. And to your point, not just selling finance, but selling more products in that finance product. So working out how they can do the window tinting and do the paint protection and other products and bolt that all in.
Well, it's the real skill, isn't it? You know, the customer says, I want this car for 85,000 dirhams. What's the monthly repayment? And the F&I person says, you know, that's only going to cost you 800 dirhams a month. And because I know you're going to keep it 5 years, I've thrown in the extended warranty, the service package, and the tire and rim. So over the next 5 years, for 800 dirhams a month, you've got nothing further to think about.
Exactly.
How good does that sound?
Well, also 100%, and also 800 dirhams a month, you know, is very doable. If it's an 85,000 dirham car and someone says, well, I can buy a brand new Chinese car for 85,000, right? You're going to struggle competing on just the on the road price. Yeah. So breaking it down into that monthly price and adding more value has got to be a strategy for dealers.
Yeah,
that we're not seeing over here at the moment.
No, I think that you know, if there's one takeaway from this episode, that would be it. To start tapping into the opportunity, take some small steps, bring control of that process in house, and have a dedicated F&I person who's got the skill of bundling all that together. It'll be a better experience for the consumer, and the dealer's bound to make more money.
Glenn, I think that's perfect advice. So thank you very much for that.
Thanks.
Until the next time.
That's the pod.
See you later.
Bye.
Thanks.